Hello, this is Huskins, your Forex mentor. Welcome to the daily review of Monday, February 25th and the preview of Tuesday, February 26th, 2013. Your daily dose of events that shaped the Forex markets. Your thought for the day. Before you do anything, you ask yourself this question: will this matter a year from now? Let's talk about the joke for the day. This is really interesting. The pessimist sees the glass as half empty. The optimist sees the glass half full. The normal forex day trader just adds whiskey and gulps it down after his losing trade. Let's strive not to be a normal forex day trader, because a normal forex day trader is amongst the losers. As you know that 95% of the forex market lose money. So let's try and be those 5%, or at least those 1% which makes the significant amount of money trading forex. Now our trade for the day, trading the gap. Now this particular trade was not discussed and it wasn't a part of a trade plan. Hence I'm not going to put that in the results page, but as a part of ongoing educational effort, I'd like to share with you how I went about trading this particular trade. So this is the GBP USD. I'm going to discuss why we had such a big gap in the GBP USD and whether it is significant or not. But we did have a huge weekend gap in the GBP USD, and my trade was, I actually traded this on the binary. My trade was that at 3 p.m. EST, that's 8 p.m. London time, on Monday, the market would close above 1.5170. This wasn't a forex trade, it was a binary options trade. Now I'll tell you why I did that. Normally, I've noticed that 99.99% of the time, gaps are always filled. That means that if the market gaps, the market always tends to fill it up. But this time, the news which caused it was a downgrade of the UK economy. And I wasn't too sure how much lower would this go before this fill happens. That's why the best idea in my approach was not that of a forex trade, a conventional forex trade. That means buy this particular gap, because in my opinion it could have gone a lot lower than what it in fact did. But I knew that however low it goes, it would eventually go ahead and close the gap. So what I did was I bought a binary option, and my risk was about $4. That means if I get my trade wrong, I'll lose $4, and if I get my trade right, I would make $100. So that's on one lot. So this is what the binary option trade was, and needless to say that I did win that particular binary option trade, and I did book in the $100. Now, the idea, there are two things which I discussed here today. Number one is trading the gap, and number two is how we can use non-traditional forex spot market to profit from the movements or profit from such kind of gaps. If it was any other normal gap, I would have traded the forex market, but not this time. Anyway, I'm not going to be recording that in my results, just something to share with y'all. Now, this is something which is very important. Kuroda reportedly will be the nominee to head the Bank of Japan. Well, the Japanese Prime Minister Abe basically nominated Kuroda, the head of the Asian Development Bank, to be the next governor of the Bank of Japan. This is what the government sources said. Now, Kuroda is known to share Abe's view that aggressive monetary easing will help reverse Japan's deflation. The lower house of the parliament is expected to formally receive the nomination this week. What does this mean to us traders? It means that the US dollar JPY is headed towards 100. Want to see where it is right now? Let me just pull up the charts really quick. Open chart, open a daily chart. You look at this, we are in an uptrend. Right now we are in an uptrend, and we are going to, in my opinion, we are heading towards 100. This is where we are heading towards. So whatever how we place our trades, that doesn't mean it'll just be one directional way up, but any dips in this uptrend is something which I'm going to be buying. So that's something which you need to bear in mind. And but better still, it might be time to buy the gold JPY rather than just buying the USD JPY. Um, Now, I'm not going to go into detail in this preview, but that's one trade which I'm definitely considering, because I find gold as underpriced right now. And if the Japanese yen is going to lose value, um, I think it'll be nice to hold gold against the Japanese yen. That's just my opinion. Um, just something to chew on. You need to do your own research and due diligence and see whether this is something you might want to do. I'm just telling you what I think would be a good trade. Now let's go into the news over the weekend and what actually moved and shook the markets. Now Moody's cut UK's credit rating to AA1 from AAA for the first time since 1978. Now, basically, Moody's Investor Services on Friday cut the United Kingdom's credit rating from AA1 from AAA for the first time. Now, it cited weakness in the nation's medium-term growth outlook that now it expects to extend for a number of years. Basically, in Moody's point of view, UK it'll be sluggish, and there's not going to be much growth, and that's why they've cut the rating. Now, what does this actually mean? It means nothing. Zilch. Nothing at all. You remember my trade plan was to trade the gap. Now, why did I consider that trade plan? It was because Moody's had the UK on a negative watch since February 2012. So since 1 year, it had already given. This is the way these agencies operate. They do not directly put someone into, or downgrade them. What they do is they put them in a negative watch, and then they downgrade them. So basically, we had a years to see whether a downgrade would come about, and over the last 1 year, there hasn't been much growth at all from the United Kingdom, and the numbers from the United Kingdom haven't been great at all. So what does this mean? It means that they downgraded it, but since the market was already expecting it, um, the gap which it caused over the weekend was filled in. Now, upon the news, the pound crashed from 1.525 to 1.518. Now, Osborne says loss of AAA rating won't change policies. Basically, the UK's Chancellor, George Osborne, says he will stick with the austerity to fix the nation's financial problems, despite Moody's Investor Services decision to strip Britain of its AAA credit rating. You need to remember, USA does not have a AAA credit rating now. So doesn't the United Kingdom. Now, Walters sees investors returning to public markets. Now, this is something very interesting. Now, Securities and Exchange Commissioner Chairman Walter said that the agency saw a 22% increase in money raised through public debt and equity last year, the first such increase since the financial crisis of 2008. It is important that we embrace a regulatory agenda that is consistent with continued growth in public offerings. What does this mean? It, in my opinion, let's get ready for bear market. Um, the stock market is a game of musical chairs. You do not want to be the last man standing. If you are the last man standing, you get out. And now the institutional traders and the market has created a false optimism in terms of expectations of where the stock markets are headed, and uh, they are pulling in the retail sector. Now, once the retail sector starts coming in, they are the ones who do not have deep pockets to continue to uh, you know uh, get get the market moving upstairs. So now I'm not calling for short, shorting the stock markets tomorrow, but now start getting prepared. Now I'll be looking at things like the consumer sentiment, and these are counter indicators when, because in my view, the retail sector and the consumers are the last people to know when the crisis is coming, and they're the last people to know when it has actually ended. Now, I have a little quiz for you. Guess who holds the majority of U.S. government debt? Is it China? Is it Japan? Or is it USA? Take a minute. Now, if you answered China, that is absolutely wrong. China holds just 7.5% of US debt. The vast majority of it is held by US institutions and individuals. So the answer is USA. Now, what percentage of products and services consumed in the US are produced in the US? Is it just 25.3%? Is it 58.6%? Or is it 88.5%? Take a minute. The answer is C. Most of what the US consumes, the US makes. And there is little dependence on China for anything. Now, this particular whoever I've asked this particular question to, they've always replied, 25.3%, or one or two people have replied 58.6%. The idea, what I'm trying to put into your head right now is that do not go with the flow with just assume knowledge that China owns USA. No, that is not true. The debt, China does not hold the majority of the debt of USA, and USA is not dependent to such a big deal on China. Let's try answering number three. What percentage of products consumed in the US are actually produced in China? And the answer is 2.7%. As it turns out, a total of 88.5% of the US consumer spending is on products made within the United States, and Chinese goods accounts for only 2.7% of US personal consumption uh, expenditures. Now, why is that? If you think about nearly all the goods or all the shirts or t-shirts or whatever you buy, jeans which you buy, they're all made in China, but then that is just a minuscule amount. The most of the equipment and services like visiting the doctor, other services, they're all produced in the United States itself. So just a little bit of something to change your perspective. Now let's look at the preview. Now I have tomorrow we're going to have the Bank of England's governor King speaking. I don't have a particular trade plan for that. I have a trade plan brewing up for the employment level in the Swissy. I might share that with you all for the subscribers. But the most important thing which we'll be looking at is we are going to be looking at the new home sales from tomorrow. There is a trade plan, though it comes up with at the same time as Bernanke is testifying. So I'm not very sure about it, but I might just give it a shot. So new home sales, our subscribers, you'll have the trade plan to that, and I'll tell you how the results of this particular trade uh, as it happened tomorrow. Thank you so much for watching this. That's it for today. Adios and God bless you.